Sanjiv Bhasin joins us, and with Sanjiv Bhasin, well, we look into the camera because he joins us from Delhi, but today he's sitting next to me. क्या बात है? Welcome to Mumbai.
Thank you, Nikunj.
ठंड में यहाँ कम है, better है weather.
बहुत अच्छा है.
Pollution भी कम है.
Pollution भी कम है, ठंड भी कम है. दिल्ली में भी pollution इतना नहीं है, but and the ठंड is also moderated, so it's been a welcome change.
Did you see the new coastal road?
No, I came late in the night.
Infrastructure है बॉम्बे में देखिए. We can take with a lot of pride. Sea-link infrastructure. I mean, think about it.
Delhi was 15 years ahead of us, to be fair.
Coastal road.
Oh yeah, there is no
The
coast.
metro.
Yamuna is hardly...
Aisha, the metro.
Yeah.
I mean, a world-class metro
Fabulous.
network I have not seen anywhere. Not because I stay there. Even I am proud to go to the university because it takes me much more less stress and less time.
And so clean and,
And
so
so
well
clean and neat and air-conditioned. Bombardier has created the best you could imagine.
Yeah, absolutely.
Bombardier,
But is it as warm for the equity markets after the volatility that we've seen this week?
Well, I told you beware the Ides of March, and it's played out. The Ides of March finishes today. I expect the second half to be much better. You will have to deal with the fact that the entry and exit in mid and small cap is always going to be cumbersome because of impact cost, and that is where the larger swings are. The index may see this 21,800 because of but I think more pressure, more ease now on the banks. Plus, this 2 rupee rate cut means bond yields and banks will be in a better shape, and rural income start to do well. So, in all, you are counterbalancing the market. The supply and demand and some of the irrational exuberance which was there on the mid caps is already seen a large part of bloodletting. Maybe another day or so of consolidation. You are through with advanced tax numbers, you are through with the opinion poll which has given a resounding victory to the present management, and I think global cues like metals coming back very strongly from China. By the way, copper is at a 3-year high now. So it's telling you that the rebound in China for specialty chemical metals will again play a key part.
One has to, let's say, look at a very large percentage number. How much of the correction in small and mid cap stocks is over? 50%, 60%, 70%?
80%.
80% is over.
Because when they lose 60%, yeah, 80% from their highs they've been, and I know I beg to differ, this was more of an induced correction. The real money is still going to be made in the small and mid caps. They are the ones who have withstood themselves in the carnage of COVID and so on and transitioned themselves. Yes, the valuations were running high, but maybe putting an embargo on mutual funds will see direct inflow. So it's beneficial for brokerages because clients who want to buy, they buy the same stock through the directed. And I think that results will speak for themselves, which has been the case of PSUs. So most of the pain is being on a missed out rally on the PSUs, and any fall over here now would be a buying opportunity.
So let's start with your small and mid caps list. Give us your 3 top ideas.
So firstly, see Hindustan Copper, that has been my top pick for some time. From the 140 level, it's at 260. But copper cathode in the country, there is only one player, and that is Hindustan Copper. The price of copper has hit a 3-year high. And China's cut down on production means this is going to be more in demand. For India, I think Hindustan Copper makes money hands over fist. That is my top pick. Second would be India Bull Real Estate, which I've come on record to say you can't have one of the largest players with a market cap of 6,000. It is one of the arguably the biggest players in Maharashtra and Delhi. We know the NCLT meet for the demerger which goes through to embassy would be a very, very key play. Blackstone is an investor in that. So I think this is a stock worth holding. Some of the smaller banks like Dhanlakshmi and DCB Bank, they are giving you a very good opportunity. I think yields can soften, but in the mid caps, these we also want to balance out by some of the large cap players like HDFC Bank, ICICI, Ultratech. I think cement can be a very strong player. In that, Ramco Cement is my top pick. 2.3 time price to book. Enterprise to EBITDA, it's trading at the lowest in the basket, and cement prices I think are around the corner going to go up. Plus a 2 rupee fall means fuel costs will be saving, and also Aisha, by the way, pet coke prices have fallen very sharply, which again is a positive for Ramco.
30% down or something year on year. Very sharp.
Correct.
Okay, ask Sanjiv Bhasin for 3 ideas. We always get about 5, so that's a great thing.
To go back to the list of, Bhasin Saab, Hindustan Copper, India Bull, Real Estate, Ramco Cement, and then there is South Indian Bank, right?
DCB,
DCB.
and Dhanlakshmi.
Why do you like Dhanlakshmi?
I like Dhanlakshmi purely because you can't have 1,000 crore market cap on a asset which is growing at very, very fast, and they are now one of the best players in CASA ratios. Reason being the inflow of money from Kerala and the NRIs, and in agri and gold they are increasing their stake. NPAs are arguably at the lowest, and liability franchise is growing higher because they up the rates. So you cannot get a good run bank at a market cap of less than 1,000. It may take some time. When I last recommended it from 38, it went to 59. It's again come to those attractive levels. This is the time to put your money in this stock. DCB Bank purely because the management itself has upped their stake at 135. When management buys at a premium, it's obvious that they are seeing more value in the underlying asset.
I don't see any PSUs in your list though.
Well, Hindustan Copper was my top pick, and Nalco sale, or you have Hutco, NBCC. Look at those stocks. Real estate prices, particularly in tier 2, tier 3, Aisha, are like how, and the triple effect of real estate, gold, and stocks. The money flow actually is coming from smaller cities. I'll get no money from Bombay, Calcutta, and Madras, but when I go to Baroda, or in 1 hour session, we get AUM which we have never imagined. And it's not because of me, it's the sheer weight of getting into equity as an asset class, which is why you see the SIP numbers.
Well, mutual funds, they have SEBI in a sense instructed mutual funds to do a stress test. Stress test essentially is that what has happened, let me explain it to our viewers. Money has really ballooned into mid and small cap stocks. So when a lot of money is chasing very few stocks, what happens typically is that these stocks, they become disproportionately higher. Now, flows are strong, but liquidity is not that strong. And in a falling market, when stocks, they fall, liquidity tends to dry up. The peculiar thing about equity market is that as prices go higher, demand becomes higher. When prices go lower, we've seen that, let's say, the evidence of that on Wednesday, markets fell, but the volumes were not dangerously high. So what SEBI has instructed to mutual funds is that do a stress test. In case of redemption, what is the preparedness of your portfolio? What is the preparedness of some of the schemes there? And some of the MCs, 15th March I think is the deadline. Quant has come out with a stress test report. Edelweiss has come out with a stress test report. A stress test report I think has come from Nippon. Nippon's come out? I'm not sure.
Yes. Nippon has also come out. I've read that.
Okay. So we'll try and get you some, details from, from Meeting Out team as to what specifically these AMCs have said. But is that something which is a concern for the market, or more like, okay, let's move on?
No, so Nico, we also from so many years know the impact cost in mid and small cap is much higher. When you go to buy them, they'll be up 20%. When you go to sell them, because of the sheer liquidity, and that is what causes the volatility. I'm not saying that is there to stay. The maturing of the market will see more. But I think a large part of the froth which was hurting everyone may have been gone in that last 2-3 days, and you'll see a little bit more of consolidation. We are coming to March, and the real show will be what will be the future on the earnings, A. B. What would be the outlook on, which is very positive, on the government returning, and what is so you have to look now for the next 3-6 months. That is why. And thirdly, what is the structure of portfolios, which mutual funds are exposed to where, and what is the outlook on the earnings. So I think large part of the fear factor may have played out. Another few days of consolidation is very much on the cards in the mid-cap space, which is why we had suggested to take some money off the table at the beginning of the month and get into large caps.
Okay, be safe, and this adjustment within the mid and the small caps could take some more days. But yeah, the large part of the damage seems to be behind us. But since we're
Understand your outlook as well when it comes to the entire banking space, given that we have seen that sort of a comeback from the likes of an HDFC Bank. What's the pecking order when it comes to private banks?
Yeah, so good morning. Avan, it will be HDFC, ICICI, and Axis and Kotak in that order. HDFC obviously has borne the brunt of the underperformance, but I think that will make a strong comeback. Plus today's bond yield will again be a beneficial to that. ICICI has been the prima donna which has led from the front. Axis and Kotak make up for 4 of the large cap. We are more bullish on private banks than the PSUs. Also in the lower strata, I mean, this is now again an opportunity to get into a stock like RBL. As you are aware, 4% of RBL was bought by the Mahindras, and now they've raised cash by selling a stake. Who knows, there could be another stake buy. You've not just done it to invest. And RBL fits the bill perfectly for a mid-cap bank, which is starting to show very good traction on the liability franchise. So I think RBL is worth being bought at this price. As a disclosure, we are invested in these stocks and we have vested interest. We think RBL can be a huge outperformer in this year itself.
Okay, that's an interesting take coming in on RBL Bank. Paytm, what do you make of this NPCI approval which has been given to the parent now to operate as a third-party app? Brokerages are saying, what they're still awaiting clarity on is user merchant retention, normalization of the lending business. But do you think some amount of the overhang gets lifted?
Well, yes and no, because it's very painful. The slow attrition, the slow performance is telling you that large part of the, forceful selling may have been done. News flows which are positive will again see lukewarm response till you get more color. And that's obvious, Aisha. You cannot have a transition overnight. But it clears large part of the uncertainty. Now, it depends on how fast they are able to retain what they lost. As you know, they used to do about 1.8 billion transactions a week, which could have been, taken away by the other UPI players. But I still think as a brand, and now with this clarity on the bankers, it should be in a stable place. We will see the quarterly numbers. We will wait for more guidance from the company. But I could say that the worst may be behind, closer to this 380, 400.
Some other stocks as well that we
already talked about your banking preferences. But outside of the banking pool, where else are you seeing opportunity to buy at these levels?
So Ultratech remains my top pick. It is in our portfolio. We think the cement stabilization is now part of the course. You've seen the demand for housing hit record highs. I think Ultratech is a natural constituent. Ultratech becomes a pillar, plus with the rate cut on fuel, it adds to their margins both for petcoke. I like HCL Tech, which is again in our portfolio. It is one of the best performers along with Wipro on the IT side. We also like ONGC. One large cap which I think is most undervalued is ONGC. And anything to do with crude on the upside, ONGC will again lead the charge there. You can also add not a large cap, but Bata as a dominant play in the rural income, which is changing, and that could be a part of that. But these are some of the ideas which we like. Wipro and Cipla. Cipla has been our top pick in the pharma space.
Okay, let's get in. Naresh, your take.
The making of Zomato, it's, I think, a little off from its previous top. But having said that, its closest competitor for one of its businesses, that's Blinkit, Zepto, is also now starting platform fee.
Well, you are aware that competition will be there, and it's for the good because the demand is insatiable. But I think the type of valuation which Swiggy is getting in the private equity space when it gets listed, it will definitely see Zomato trade at a premium. We've had Zomato in our portfolio. We remain positive on that. But maybe at these levels, there is some profit taking from the old, private equity investors and so on. So it's part of the course. And I think Blinkit has been a very, very star performer, which most thought of a, negative. And that's why we're seeing consolidation in this field is going to take place in the near future.
Okay, Sanjiv, always great to have you in the studios. Enjoy your stint in Bombay. Let's just quickly mark what the pre-open rates are indicating.
If you like this video, then like, share and subscribe to ET Now.